All right. So, Peter, Happy New Year to you, my
Yeah,
trading warrior brother. How are you?
to you as well, Dale. Thank you.
Th Thanks. So, top of mind going into, the red wave and a new year and, um, you know, uh, Trump wants a lower dollar. I think everyone wants a lower dollar because then their assets will appreciate, right? So, what are you thinking going into this year, Peter?
My first focus is on bond yields.
Okay.
Um, Bond yields in the U.S. are a little changed today, but there's been a clear rise. And what is most
Yeah.
noteworthy is in 2024, having the Fed cut 100 basis points and the 10-year yield go straight up.
Yeah,
And
I've never seen it before. Have you?
This is highly unusual to this extent. I don't know if you noticed today, but the Japanese 5-year JGB yield closed the highest level since 2009. The 10-year JGB yield closed overnight at the highest level since 2011. We're in a bond bear market, and that is my
Globally.
globally, and that is my number one focus. My
Okay.
number two focus is the tariffs, and whether they're sort of selective and focused or scattershot like they were in 2017, 2018, which put U.S. manufacturing into recession. Washington Post today article is hinting that maybe it'll be more focused, which I'm not a fan of tariffs, but I understand the basis behind them. And I think if they can just keep them as little as possible in terms of the those impacted, we can manage through it. But that's the other focus. And then I
Okay.
guess lastly is looking at the broad market is whether how much more energy does the AI trade have? And
Okay.
I think that's going to be obviously a big focus because these stocks dominate the indices.
Okay. So still MAGA, except MAGA is getting a little more, uh, what do you call it? There's dispersion even between MAGA. Microsoft doesn't look like some of the strength, and some of the strength rolled over last week, like Apple. Um, Bifurcation. That there's even bifurcation among seven stocks,
Yes,
which I
which is a change of tone just right there.
Okay. Yeah, and AI, I tried, it was a good trade, but it didn't turn into what I thought it would, Nvidia, but Nvidia looks like it has new highs in it. So, but yeah, that's where there's the most error. So you think if the economy slows, that companies will stop spending as much because they're not generating as much as they thought from the AI they've already invested in.
Yeah, and I think investors are finally asking those questions. Is okay, this is all great, Gen AI. Look at all the things I can do, but uh, you're spending $20 billion a quarter. They being a lot of these hyperscalers, and what's the return on that money? And I think that keep in mind also that a lot of this spend is being capitalized in the income statement, so it shows up in depreciation expense. So these companies are essentially building into their income statement a much higher cost structure that they're going to have to work through over many years. So they're going to need to generate faster revenue growth in order to mitigate that in terms of impacting their overall earnings growth. Because in 2024, almost all the earnings growth of the S&P came from those top seven stocks. The other 493, I think, saw earnings growth of maybe 2%.
Okay. All right. I think I saw an interview you did with Maggie, and I think the headline was 1 foot in, 1 foot out. Keep 1 foot out of the door when it came to your view on the market.
Yeah, I mean, when you have valuations as excessive as they are, and you have a persistent rise in interest rates, you have no choice but to be more prudent and to
Mhm.
be more sort of value oriented because one of these days we're going to walk in and investors are going to all of a sudden care about valuations. We know valuations don't matter until they do, and
Yeah,
investors can be sort of agnostic to valuations for a long period of time. But
yeah, and
I know
and then you
from
go
history
ahead.
that if there's one thing that makes people care about valuations, it's rising interest rates, and we clearly have that. So that was sort of the gist of the 1 foot
Okay.
in, 1 foot out.
All right. So, and I want to ask you about the bonds, but since you brought that up, I've been flashing back, I still have flashbacks. I'm kidding. Well, I was flashing back on 87. In 87, bond yields were rising. The difference was the dollar was falling, and we had this distant, and the market kept going up. Okay, people were still buying risk. There was this disintermediation that kept growing between yields, which should make the market look even more expensive going up, and the market continuing to go up and get more expensive until the rubber band snapped. Do you think we have that kind of setup? Because when I look at the bonds and I look at the weekly like TLT, I mean they do look awful, and I think that just technically, if we had symmetry off this lower line off the previous two lows, Peter, from here, the October, and then this was the low before we had this, weak rally, that we could trade back to this line, and that would actually be about 72 on TLT. That's 15 handles from here. Do you think could you give me a narrative how that could happen? Are we heading into a sovereign bond crisis across the globe?
Well, crisis is a strong word.
All right. I know I'm
So
too dramatic.
yeah, so what I do think, a crisis, at least in the US, will be, I believe, if the 10-year gets to like 6.
Okay.
And crisis in the sense that everyone will be sort of forced to make tough decisions.
You mean the
We're
rollover of debt? That
Yeah, so
includes rolling
take
over?
2025. There's
Yeah.
about $10 trillion of US debt that needs to be rolled over, putting aside, not including the new incremental debt that is needed to just finance the $2 trillion budget deficit. About four of the 10 is notes and bonds. Assume
Okay.
that they were priced pre 2022. So the US government just this year is going to have about an $80 billion increase in interest expense just on the rollover.
Is that
On
triple? That's almost triple, isn't it?
well, it's on a run rate. You're talking um, over $1 trillion of interest expense
Yeah.
that has now exceeded government spending, I'm sorry, defense spending, which is about
Okay.
850 billion ish.
Yeah.
Um, but as I mentioned earlier, we've seen this rise in Japanese bond yields, and
Yeah.
while European bond yields are off their highs, they're still well above where they were a year ago in the face of many ECB rate cuts. So
Are Chinese bonds going up in yield despite all the
Chinese
efforts?
bonds have been the standout on
Okay.
the upside. Yields
Okay.
keep falling there.
I knew
Chinese
yields
bonds have
were
been outperforming all of their developed market bonds,
okay, and that's because
interestingly
the
enough.
central bank central. So yeah. So how come when the Chinese ease, they get a bull move in their bonds, and when we ease, we get a bear move in our bonds?
Well, they definitely have economic challenges for sure. Inflation is very low.
Yeah.
It's almost non-existent there. So
Well, everyone's broke. They're all broke. The people are broke in China, aren't
yeah,
they?
well, it's not just that. It's they have a look at the EV sector. They are
Yeah.
the kings of EV in the world, but it's highly competitive, and in order to be able to sell you a car, you would need to discount. So there's things are affordable there. You can get very high tech, very advanced EVs in China at a fraction of the price that you would pay for them here.
Okay. Huh. All right. Are you moving there
I am
for a
not.
TV? Huh?
I am not, but I would
All right.
visit. But yeah.
All right. We also have a sector to talk about. Still, we've had corrective action, or at least we've had corrections in silver from like 33 to where we are now. Still very positive on silver, and something I've noticed, Peter, and maybe you could help me, is that the action, silver's been stronger, but the action I've noticed in, where was it? Platinum and palladium, the white stuff. It seems like
So
now the white stuff is going to outperform gold, where gold has been outperforming, silver, by, vis-a-vis what the gold silver ratio has been going up and it's starting to drop again. So do you still like all the metals? And
um,
would it be a time to look at things that also have more of an industrial use?
yeah, the last few months, palladium has been our
There you
new
go.
position. Uh,
Nice. I like it, man.
so, it's trading at half of its level of about 10 years ago.
Right.
And, I know one of the bear case around it, and I like palladium. I don't like platinum as much. I'm sorry. We like platinum. We initiated a position in platinum, not palladium.
Okay. Okay.
Um, Platinum, about 40% of the use of platinum goes into catalytic converters.
Right. Right.
Palladium, it's closer to 80%. So I don't want to be as exposed to the auto sector as I would owning palladium relative to platinum. Platinum, other uses go into electronics, jewelry, tableware, and others. Wedding rings, for example. What I think is very interesting about both, but more so the platinum, is the use of hybrids. And if you look at sort of this VHS Betamax sort of battle between hybrids and full-on EVs, it's clear that hybrids are winning. And the use of platinum in a hybrid is as much or even slightly higher in some cases to an internal combustion engine. So I think this really extends out the timeline of the use of platinum. And interestingly enough, palladium too, this metal is really only made in three countries of the world: South Africa,
Right.
Zimbabwe, and Russia. So
So how do you
every
invest in
single
it? You
day.
just buy, what are you doing? You just buying ETFs on it, or
So
what?
for clients, we own the Aberdeen ETF, the PPLT.
Okay.
For myself personally, I own that. I also own, Anglo-Platts, which is the Anglo-American um, platinum
South,
division that they're actually spinning out of Anglo-American.
okay,
So
that's South African, right? South
yeah,
African.
yeah.
Yeah.
Again, you have no choice
Yeah.
to invest in those three countries if you want to
Right.
play an individual country. But this is a country with low cost. I'm sorry, this is a company with low cost and pristine balance sheet. So I'm more
Okay. Nice.
comfortable owning that particular stock.
All right. Well, then,
But for the average
what?
person, it's just easier to own the metal itself.
Okay. All right. So let's get to explaining or giving the new administration hints. How are they going to get their desired result of a weaker dollar? I mean, it's happening today, but the dollar's been in a pretty strong uptrend. People are arguing that, one day doesn't change the dollar trend, but the dollar's breaking pretty hard. Euro got to some of uh, my team's downside targets and we're bouncing. They still think, we could still do some work down here, some accumulation, even trade lower. Is Trump going to be successful at getting a weak dollar and not losing reserve currency status?
Well, I'm not sure because there's some inherent conflicts with the
Yeah, that's
dollar.
what I. How can he have
Tariffs.
both? Yeah,
Yeah, so I'm not sure how you have tariffs and then you want a weaker currency. I think from a weaker currency standpoint, yes, that'll probably be his desire, but that'll be more from a jawboning perspective.
right, right.
There won't be anything initiated that would lead to a weaker dollar.
Okay.
So
Well,
can
so
talk it down
we need a
temporarily, maybe, but that's about it.
we need to start getting weak economic numbers. And
You need that, or you need the BOJ to raise interest rates again, which would help the yen. You need some stabilization in the European economy to stabilize the euro. So, it could be some of that as well.
do you think that the yen is peaking here, or that because you bought 7-Eleven here when right near the
Yeah,
peak because of that?
I did sell it after the deal was announced.
Okay.
Um,
Is
the
this another
takeover deal.
opportunity to find a way to
I
take
like the yen
advantage?
here. Yeah, and in
Yeah.
fact, actually today, in Japan, Governor Ueda, speaking for the first time this year, said that that our stance is that we will raise the policy interest rate to adjust the degree of monetary easing if economic and price conditions keep improving. So I think he's laying the groundwork for the January hike, and so I think he's going to
Okay.
deliver on that. I think broadly with the dollar is we have to ask ourselves what happens with all these emerging markets. Because it's a lot of the dollar weak strength has been yes against the yen, the euro pound, but it's also been against a
It's
bunch of the
decimated.
yeah. So you look at Trudeau probably resigning within days, which I think is very bullish for Canada. Um, I think the Canadian dollar, which is up about 1% today on that
Yeah, there it
news,
is.
I think the Canadian dollar is a big buy here
Okay.
on this news. I think bringing in a conservative there after what Trudeau has brought us would be very good for the Canadian economy and the Canadian
Is
currency.
it going to
So
be Bobby Orr? I think President Trump was pushing Bobby Orr, who is my boyhood, one of my boyhood idols from the Bruins.
yeah, that would be interesting if they did.
Uh,
Um,
yeah.
but it's probably
Anyway,
going to be um, it's probably going to be I'm going to mispronounce his last name, but Pierre. Uh,
he's a conservative guy.
yes,
So
yes,
they're
exactly.
going to go the
So
other way. Okay.
yes, and just as we did here, we sort of rid ourselves of the woke nonsense. Canada potentially is going to do the same.
Okay. And will they become the 51st state?
No, they will
Uh,
remain
uh,
independent.
can we buy Greenland?
um, yeah, no, it's that's what we have to look forward to was
Yeah.
the,
Anyway,
the
I
the
mean, did
entertainment
you
of this all.
let me ask you, you remember trading under Trump 1.0? Did you enjoy trading under that by tweet?
Yeah, I mean that always added some spice to what we're
Yeah,
going to wake up to.
this could be do you agree with me that this is going to be one of the best years for traders because of the swings we're going to have now?
Yeah, I mean I think that's right. I think that the swings are going to be big, and I think one of the reasons is, at least in the big indices, is because that AI trade is going to be very difficult to replicate. And when you
Uh,
look at the valuations of some of these stocks, like Apple, for example,
yeah,
being so elevated that we could be entering, at least for those names, more of a trading range market rather than a persistent continued rise. Again, if the AI trade starts to take a breather, for example, which would lead to big swings in the indices because
yeah,
the top 10 stocks of the S&P make up like almost 40% of the S&P.
yeah.
Actually, about probably closer to mid 30s, actually, 35
I
to
could see.
38%.
Yeah, I think Apple belongs down here at 170. Um, Peter, anything new on the business front that you want to let our viewers know about that they could, check out?
No, just continuing to do my thing,
All right.
both on the publishing side and the asset management side.
All right.
No real
So,
change.
yeah, and just go to Peter's site and you could at least be updated with a summary, and he always gives you the option to get behind the wall, but you get very filled in by that. Let me just go to
I
let's
will
see.
not bore the reader.
No, he uses the word succinct a lot. Okay, so that means he's not wasting
Yes,
time,
I try not to.
and you're trying just to get to the heart of the matter, and you do it here, right, Peter, at your Substack.
Yes, exactly.
Okay, so there you
So,
are.
an
Sign in.
institutional product for a retail price.
Yeah. So there you go. I think you're going to need to uh, know what Peter's thinking this year. I know I'll be paying attention to it, and I hope you have your best year ever, Peter.
Thank you, Dale, and my wishes to you as well.
All right, Peter Boockvar, everyone, follow him on X at P Boockvar and follow him. You're going to get great fundamental stuff, and Peter has actionable ideas. It's not just on this hand it could do this, and on that hand it could do that. So he chooses a hand. All right.
You know, when you're managing other people's money, you have no choice but to choose a hand.
That's right. You have to, you can't be strongly neutral all the time.
No,
And right, you have to pick a side.
you,
So
you
that's
gotta, you gotta, you gotta take some risk if you want to make some
yeah,
money.
yeah, it's like yeah. I mean, what do we have to lose? You can't take it with you anyway. So anyway, just measure the risk before you
Exactly.
click the mouse. And
Correct.
great talking with you, Peter.
Same here,
Uh,
Dale. Appreciate having
uh,
me on.
all right, Peter Boockvar, everyone, and you could join the team in about I don't know 20 minutes for the morning edge. And let have a great week, everybody. I hope you're learning along the way. And if you're not part of a community, just do it. So adios, everyone. All right, Brand. All you guys are thanking Peter. All right, see you guys tomorrow.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.